Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, January 21st, 2026, and here is everything you need to know as the markets close for today. Indian equities extended their losses for the third consecutive session, reflecting deepening uncertainty in global markets and persistent capital outflows. The Sensex ended down 271 points, or 0.33%, closing at 81,909. Nifty 50 mirrored this weakness, slipping 75 points or 0.3% to settle at 25,157. Bank Nifty also participated in the sell-off, declining 187 points to close near 58,900. Market sentiment remained fragile throughout the day as investors grappled with escalating geopolitical tensions stemming from the global trade environment. A major highlight of the day was the sharp move in the currency market. The Indian rupee hit a fresh all-time low, settling at 91.69 against the US dollar. This record low comes amid heavy selling by foreign institutional investors and a lack of aggressive intervention, creating a challenging backdrop for import-heavy sectors. The overall market theme was dominated by risk-off sentiment, with the Nifty mid-cap 100 and small-cap 250 indices falling over 1% and 0.9% respectively, showing that the selling pressure was widespread across the board. Moving to individual stocks, it was a tough day for several high-profile names. Kalyan Jewellers was the biggest laggard, plummeting 12.2% to close at 396. Other major bearish moves included SRF, which dropped 7.2% to hit a 9-month low, and Trent, which fell 2%. These moves were largely driven by sector-specific selling and weak global cues. On the bullish side, Eternal was a standout performer, surging 4.9% following a strong third-quarter earnings report that saw net profit jump over 72%. ITC Hotels also bucked the trend, rising 4.6% on the back of impressive profit growth. In terms of sector performance, the strongest sectors today were surprisingly metals and some defensive pockets in healthcare, though gains were capped. The weakest sectors were consumer durables, auto, and PSU banks, which bore the brunt of the foreign fund outflows. On the regulatory front, SEBI has officially notified the Stockbrokers Regulations 2026, introducing stricter frameworks for technical glitches in cybersecurity. Additionally, the RBI revised norms regarding related party lending for NBFCs aimed at tightening the credit ecosystem. These updates are expected to impact capital market stocks as firms move to comply with the more rigorous standards. Looking at the technicals, Nifty 50 tested its immediate support near the 25,100 level and managed to hold it for now, though it remains below its 20-day and 50-day moving averages. For tomorrow, 25,000 stands as a crucial psychological support. If that breaks, we could see a slide toward 24,700. Resistance is firmly placed at 25,500. Bank Nifty's key support is at 58,600, and it needs to reclaim the 59,500 mark to show any signs of a recovery. The commodity markets provided no relief today as safe haven assets spiked. MCX gold surged to a new record high, crossing 1,55,000 rupees per 10 grams, while silver jumped to 3,25,000 rupees per kilogram. This massive move in bullion reflects the deep anxiety over geopolitical events, specifically the fallout from new tariff proposals and trade war fears in the West. Meanwhile, crude oil prices slipped by more than 1%, trading around 5,487 rupees per barrel on the MCX, as concerns over global demand began to outweigh supply fears. As we look toward tomorrow, the outlook remains cautious. The primary scenario for the next session is one of continued volatility as markets digest the rupee's record low and the ongoing FII exit. The potential catalyst for a reversal would be a stabilization in global bond yields or a pause in the dollar's rally. Until then, the risk remains to the downside. My actionable takeaway for you today: stay defensive. With the Nifty hovering near critical supports and the rupee at record lows, it is wise to avoid aggressive long positions in high beta sectors like auto or realty. Focus instead on quality large caps that have shown resilience during this 3-day slide. That's all for today's wrap-up. We'd love to hear from you, so please send in your questions and let us know what's on your mind. Don't forget to tune in for tomorrow morning's update to see how the global markets fared overnight. Stay tuned for tomorrow morning's wrap and send in your questions.